You know, every now and then, a stock does something that just makes you stop in your tracks and go, wait, what just happened? Well, today, we're diving into a company that did exactly that.
Get a load of this number, 204.61%. I mean, that's just a massive, almost unbelievable number for any stock to pull off. And get this, that wasn't over a year or a month. That was in a single day. So you got to ask, right? What on earth causes a stock to explode like that? Is this a sign of some incredible hidden opportunity? Or is it just a giant red flag waving in our face?
Okay, so here's our game plan for breaking this all down. First, we're going to look at that wild day. Then, we'll jump straight to the big picture. After that, we'll dig into the good signs, the signals pointing up, then balance that with the reasons for caution. And finally, we'll wrap up by looking at 3 possible ways this could all play out.
All right, let's get into it. Section 1, that explosive day. We're talking about November 13th, and the company is Nuvve Holding Corp. You'll see it trading under the ticker NVVE.
Now, to really get to the bottom of what's going on here, we're not just guessing. We're going to use an expert source as our guide. We are digging deep into a detailed technical analysis report that was put out there specifically to make sense of this absolutely wild ride. You know, this crazy surge didn't just come out of nowhere. This stock has a history of being, well, incredibly volatile. Just look at this timeline, right? Its 52-week high was way up there, over $5. But just 3 months ago, it bottomed out at less than 15 cents. That huge range is some really crucial context for understanding how it jumped up to 47 cents.
Okay, so with that background in mind, let's jump ahead a bit and get the big picture. Before we get lost in all the details, what's the report's main conclusion? What's the bottom line here?
Well, here it is. This one sentence from the report pretty much sums up the whole dilemma. On one hand, you've got this powerful, positive momentum, and on the other, you have these really serious warnings, basically screaming, whoa, slow down there.
And this really illustrates that central conflict perfectly. On the left, you see the opportunity, that massive one-day return that just screams potential. But then you look to the right, and you see the risk. The analysis points to a risk-reward ratio of about 0.5. To put that in simple terms, it means for every dollar you're risking, the potential gain is only 50 cents. Yeah, that's usually not a bet that traders are eager to make.
Okay, so let's dig into the positive side first. Let's really unpack this bullish momentum and figure out what exactly has investors so fired up.
But before we do that, we need to get on the same page about something called trend indicators. The easiest way to think about them is like a weather report for the market. They don't just tell you which way the wind is blowing, if the stock's going up or down. They tell you how hard it's blowing. How strong is that movement?
And for NVVE, well, the report shows the wind was blowing like a hurricane. A key indicator that measures trend strength was showing this upward move was incredibly powerful, not some weak little blip. Then you have another one that looks for new highs. It was basically maxed out, just screaming that the stock was in total breakout mode. And to top it all off, this was happening right as some positive news hit about a new deal in Japan, which just added more fuel to the fire.
But, and you knew there was a but coming. Remember that quote from the beginning? It feels like for every single positive sign, there's a big warning sign right next to it. So now we've got to flip the coin over and look at the bear case. All the reasons for caution.
So, the biggest concern here comes from a group of indicators called overbought oscillators. And honestly, the best way to picture what they do is to think about a rubber band. You can stretch it, right? You can stretch it really far, but eventually you hit a limit, and what happens? It's going to snap back, and probably pretty violently. That's exactly what these indicators are trying to measure.
And according to the report, NVMV's rubber band is stretched really tight right now. We've got multiple indicators that measure buying pressure, and they're both in extreme overbought territory. What's maybe even more concerning is another indicator suggesting that while the price was rocketing up, big money might have actually been flowing out of the stock. That is a classic warning sign. And then you throw in the fundamentals, which aren't great. The company's latest quarterly loss actually got bigger, widening to $4.5 million.
So when you add all that up, it leads to the report's most serious warning, the risk of something called a volume trap. And let's be blunt about what that means. It means there's a risk of a pump and dump scheme, where a stock gets artificially inflated with a lot of hype, only to be dumped on unsuspecting buyers at the top. So, what we have here is this really intense tug-of-war, right? You've got the super bullish momentum on one side and these really scary bearish warning signs on the other. So where does NVVE go from here? Well, the report lays out 3 possible futures.
Okay, scenario 1 is the bullish case. The buying frenzy just keeps going, the volume stays high, and the stock makes a run for its old 52-week high. Then there's the bear scenario. That stretched rubber band we talked about, it finally snaps. The overbought signals trigger a massive sell-off, and the price just collapses back down to recent lows. And finally, you've got the neutral path. The excitement kind of fizzles out, the volume drops off, and the stock just trades sideways, treading water while the market tries to figure out what to do next. And all of this leaves us with the ultimate puzzle, doesn't it? When a stock's signals are this mixed, when it's being pulled in two totally opposite directions at the same time by this incredible momentum on one hand and these massive red flags on the other, how do you separate the opportunity from the risk? How do you figure out which story is the real one?